Welcome to a new week in the market. Today we are looking at Verizon, Schlumberger, American Express and SAP.
Verizon announced results on April 22, 2022. Interesting facts picked up from the call. Total consumer revenue for the quarter grew 10.9% year-over-year, driven by the first full quarter of track phone inclusion, higher equipment revenue, and strong core wireless service revenue growth. As I said before, 5-year adoption is already much faster than what we saw when we changed from 3G to 4G. A year after 4G launched, less than 10% of the users had a compatible device. We also made our first 5-year agreement with a premium global automaker, and we will bring 5G connectivity to the next generation of Audi models starting with 2024 vehicles. Our network team is now able to deploy this spectrum a full year sooner than expected, unlocking another 40 million of addressable population. And remember, all is built on how we built the network from the beginning, where basically from the data center to the edge of the network, have one unified network which is 5, and then at the edge of the network we can do different solutions for different types of customer groups. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. Matt, to what extent was the higher working capital used in the first quarter really a timing issue? How do you think about the potential of this industry to be raising prices at the margin for consumers if we do see inflation starting to creep up? Are there any pockets of strength or weakness that you would call out underneath of that overall pressure you've been seeing in March and April, or is it pretty broad-based? Are you giving any consideration to accelerating that pace over the next few years, given what seem to be improving economics for fiber broadband across the industry? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, sentiment was 50% positive. About prices, sentiment was 66% negative. About growth, sentiment was 83% positive. About outlook, sentiment was 50% positive.
Schlumberger announced results on April 22, 2022. Interesting facts picked up from the call. These decreases were primarily due to the effects of seasonally lower digital and exploration data licensing sales, partially offset by improved contribution from our APS projects in Ecuador following the pipeline disruption of last quarter. Reservoir performance revenue of $1.2 billion decreased 6% sequentially, while margins declined 232 basis points to 14. These decreases were due to lower activity in Latin America and the seasonal activity reduction in the Northern Hemisphere, while construction revenue of $2.4 billion was essentially flat sequentially as seasonal reductions in Europe, Russia and Asia were offset by strong drilling activity in North America, Latin America and the Middle East. With this backdrop, and despite uncertainty linked to Russia, we believe that the favorable market condition outline should allow us to maintain our full-year ambition of year-on-year revenue growth in the meetings and adjusted a bit of margin exiting the year at least 200 basis points higher than the fourth quarter of 2021. For the second quarter, we anticipate the operating margins to expand 50 to 100 basis points, driven by further operating leverage, and the positive conditions are outlined in that context. A sequential margin expansion trajectory is set to resume and subsequently strengthen in the second half of the year, in line with our full-year guide. Additionally, 2022 set to benefit from higher discussion spending and higher product sales and year-end deliveries as customers secure the necessary capacity for the 2023 growth plan. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. So what do you think it would take for the industry to really get back and move towards those 2006, 2007, 2008 margins? So with that said, with that as a backdrop, have you started to see accelerated digital adoption, and if so, what parts of the international market are you really starting to see accelerated adoption? And the follow-up is, can you talk about your exposure to the increased capex here at Saudi Aramco and ADNOC and how you see that trickling across your segments? Are you expecting significant activity declines? But if we don't get a strong subsea or offshore deep water recovery, what else can we expect that would lift the production system's margins as we go forward? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, sentiment was 75% negative. About prices, sentiment was 66% positive. About growth, sentiment was 79% positive. About outlook, sentiment was 82% positive.
American Express announced results on April 22, 2022. Interesting facts picked up from the call. When you think about the rate at which we've been bringing new premium card members into the franchise, record first quarter for US Platinum Gold on the consumer side and Business Platinum, that mechanically now just makes me pretty darn confident that as you look at the next few quarters, That 16% is likely to even further accelerate a little bit as we build on the acquisition momentum we have, because as I think it sounds like you recall the accounting for fees, you're amortizing them over 12 months from when they're paid. First quarter year-over-year net interest income growth of 20%, while very strong, remains slower than the growth in our lending AR as revolving loan balances continue to rebuild, and so we expect net interest income to be a pandemic recovery tailwind to our revenue growth in 2022. To set up on revenues on slide 18, we're tracking well against our expectations, and looking forward, we still expect to see revenue growth of 18% to 20% for the full year of 2022. This quarter we acquired 3 million new cards with acquisitions of U.S. consumer and U.S. business Platinum card members reaching record high as Steve noted earlier, demonstrating great demand for our products, especially our premium fee-based products. Most importantly, our first quarter revenues were $11.7 billion, up 31% on an FX-adjusted basis. Second, our commercial business's strategic focus on helping SME clients run their businesses continues to drive strong growth in overall SME spending, up 30% in the first quarter with acceleration in growth across both the US and international. Our millennial and Gen Z customers continue to drive our highest consumer growth, with their spending up 56% year-over-year and spending growth from all other age cohorts increasing as well in the quarter. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. And how worried are you or your corporate clients about some of these issues like supply chain constraints and the economic concerns? Are you at all concerned over the risk that the Fed may be forced to actually push the economy into recession to tame inflation? And if we do continue to see better credit, Steve, how are you thinking about the potential to lean further into opportunities to continue to acquire cards and move towards your aspirational targets for 25? I'm just wondering, can you quantify sort of the market share that you guys can take in and also speak to any potential headwinds you're keeping an eye on in the landscape currently? Should we expect a similar year-on-year trajectory for the next 4 quarters, as you recognize some of that revenue over time, or is this a one-time kind of bump? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About spending, the sentiment was 68% positive. About investments, the sentiment was 60% positive. About costs, the sentiment was 67% negative. About growth, the sentiment was 77% positive.
SAP announced results on April 22, 2022. Interesting facts picked up from the call. Within that, our intelligent spend business returned to a healthy 16% growth rate and our remaining SaaS PaaS portfolio was up even 34%, driven by outstanding contributions of the business technology platform Qualtrics and most notably a 71% growth of S/4HANA. As for motorcycle, the global leader in high-performance electric motorcycles and powertrains has chosen SAP S/4HANA overall vehicle to help them replace their legacy infrastructure and scale their manufacturing operations to meet rising demand. In the first quarter, the trend towards larger cloud transactions continued. Deals with volumes greater than 5 million euros contributed 45% of our cloud order entry. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. Can you explain why the profit impact is so large and whether there's a one-off element here that comes back in 23? And then secondly, just as we look a little bit further out into 2023 and the moving parts on the cloud gross margin, can you give us a feel for the size of any potential impact to cost that persist into the first half of 2023? Do you think customers can even pause or slow these transformational multi-year projects? Could you just talk a little bit about the plans in terms of putting cost into the business, if the tech budgets and companies were starting to be a little bit more cautious with the focus beyond making sure that the business was in good place to grow in 23, or would it be to protect the EBIT guidance for this year? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment was about 80% negative. About investments, the sentiment was about 80% negative. About growth, the sentiment was about 72% positive. About outlook, the sentiment was about 50% positive.
I hope you found today's updates helpful. If you want to learn how to build your own algorithms, you can check our free YouTube channel where we post hands-on courses about how to build them, or get the book that is looking at multiple types of investment algorithms, or feel free to check our small group customized lessons for something more personalized.